Unemployment has ticked up today, climbing from 3.5 to 3.7%. Let's get some analysis. Bring in Warren Hogan. Warren is, of course, economic advisor to Judo Bank. Warren, does this show the economy is slowing and that unemployment is now rising as the RBA would hope that their rate hikes are kicking in?
Yeah, hi Kieran. Thanks for having me on the show. Look, we are getting our first signs of an easing of labour market conditions. We saw employment dip. Full-time jobs fell quite significantly, about 25,000 jobs. And we're seeing this upward movement in the unemployment rate. And it really is only early days. This comes on the back of some very strong numbers in February and March. And of course, the backdrop is of very strong labour demand, high vacancies, strong job advertising, and of course, the absolute level of unemployment is still extraordinarily low. So yes, we are getting some early signs that the higher interest rates are starting to impact the labour market, and I think this is desirable because it's going to start to take some of that risk out of wages, inflation, and of course take some pressure off interest rates.
So yeah, okay. So on that front, what does it mean for interest rates? Will it make the RBA less likely to hike rates in June?
Well, this will be welcome news from the RBA. It's certainly consistent with their expectation that labour market conditions will ease over the course of the next year. That is, unemployment will rise a little bit, the employment growth will slow. And of course, in combination with yesterday's wage number, which, although wages are rising, they're still rising at a very modest pace. I think this buys them some time. I think when they hiked rates in early May, they were hoping that they could sit back now for a few months. And I think this data really does give them that leeway. Now, I don't think we can read that it's the end of the interest rate tightening cycle by any means into this one monthly figure. But if it is the start of a new trend for softer employment growth and, of course, rising unemployment, then we could be this could be a signal that we're close to the top of the interest rate cycle.
What's your read on the outlook for jobs and employment in Australia then?
Well, the reality is that job vacancies and job advertising is still extraordinarily high. So I think we've still got this backdrop of a resilient, solid economy that is still looking for workers. I think the one piece of information here is that the big lift in population growth that was confirmed in the budget with those high net overseas migration targets is providing that labour supply. So, look, I think we can start to see those labour market conditions ease, and that's exactly what the RBA wants, without a big loss of jobs. So I think that's good news. I do not expect to see a sudden turn down in the Australian job market, and I think that's good news. I think it'll be a very gradual move from here on in.
Okay, great to get your insights as always. Warren Hogan from Judo Bank. Talk to you soon.